Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. One question that I've gotten over and over and over again over the course of my more than 2-decade career is there maybe a better time of day to place my trades, to get in or get out of the positions when I've already made a decision to do that? Well, we're going to be talking about a technical tool that's sometimes used by traders to address precisely that effort, and it's known as the volume-weighted average price. This is a tool that's sometimes used to refine the timing of an entry or an exit on a trade, maybe right down to the minute. So this is going to be an interesting discussion. We'll talk about how VWAP is built, how it might be used for the timing of entries and exits. But before we get to any of that, though, let me first of all say hello to everybody who's chatting in out there on YouTube. As always, nice to see all my familiar Friday friends. Hello there, Jay Richardson and Janelle, Grace, JDLMI, Will, Zinc 560, Queen, Lola, Mary, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you happen to be here for the very first time, and there were a couple of those screen names that weren't entirely familiar to me, well, welcome. It's great to have you here in the Friday crew. Now, if you're watching on the YouTube archive after the live stream has already concluded, that's great. Enjoy those recordings. That's a great way to watch these webcasts. But if you'd like to be here in the live stream, as I mentioned, this is a Friday webcast series, and we kick things off promptly at 1 Eastern time. We'd love to have you here in the audience. Now, as a treat for my live stream audience members, my very good friend Kevin Horner is going to be hanging out in chats. Kevin and I are both going to keep an eye on the questions that come in, but if I can't get to them, Kevin's there to pick up my slack. Thanks for having my back there, Kevin. And for those of you who are already familiar with Kevin, you know that I've been working with Kevin now for years and years. So great to have you here, Kevin. He brings a ton of experience to this discussion. Now, Kevin and I would also like to issue an invitation to everybody listening to follow your favorite Schwab presenters on social media. You can find Kevin and me on X. So you can find me there at Cameron May CS. You can find Kevin on X at Kevin Horner CS. You can also follow me on LinkedIn now. So you just go to linkedin.com/in and then /Cameron May CS will take you right to my profile. You can give me a follow there. But let's get into this discussion. I think this is going to be a fun one. As I dive in here, chat in, let me know. Are you or are you not familiar with VWAP? VWAP, volume weighted average price. If not, we'll make sure that you are by the end of this discussion. But as we turn to look at those charts, we need to be aware that any approach to trading or investing, of course, is going to carry risk. So this is important information. The material here is intended for general informational and educational purposes only. This should not be considered an individualized recommendation or personalized investment advice. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so with that said, let's set the agenda for today's discussion. Now, as we do each week, we're going to have a look at our existing positions in our paper money portfolio. We have 4 positions. Little spoiler alert, by the time we're done today, I think we're going to be down to 1. We've got some trimming to do. After we're done with looking at existing positions, we'll take a look at the markets through the lens of our trend value momentum strategy set. We look at that each week, and we're going to use that as our backdrop for planning and placing a new trade. But as we do, we're going to ask ourselves this question that so many traders have. Is there a better time of day to be buying this thing that we're about to buy? And when we go to sell it, is there potentially a better time of day to sell it? So let's get into it. Raymond says, very familiar with VWAP. Let's see who else. Zinc 560 says, I've actually been using VWAP lately. Okay, that's fantastic. Now, just so you know, anytime we talk about a technical tool here, don't ever take it as a promotion of that technical approach from me. I'm an educator. I just talk about the tools that are available. Then it's up to the individual trader to decide for themselves if that tool will ever play a role in the administration of their portfolio. But let's go right to the Thinkorswim software. This is the paper money version of the desktop software. And here are our 4 positions. So let's start right at the top with GE. Here's what's going on with GE. This was an entry taken on a weekly and daily PPO. As we got that bullish crossover back here on the 19th, we took an entry on the stock, hoping the stock might sustain a nice run up to the upside. And it started in that direction. we're waiting to sell on a bearish crossover, looking for something maybe more like this. That's not what we got. We got a fairly rapid reversal of fortune here. Sometimes this is a little bit long to call it a traditional whipsaw, but it's still not going to be profitable. I think we're going to lose a couple of bucks on this trade. But in any case, there's our bearish crossover. You might think, why didn't we sell it? Why didn't I sell it during the week? Well, I don't do any trading in this account when the camera's not on, so that we can capture the logic of the entry and the exit. Now, if you'd like to see a discussion of the weekly and daily PPO in more detail, because I'm not going to revisit that indicator, you can go back and watch the archive for the webcast where we constructed this trade. So if you're new to Schwab Education, make sure that you do yourself this favor. Pop down below the video right now and just click on the subscribe button. It literally only takes a second. It doesn't cost anything. But our Trader Talks channel on YouTube is where you can join these live streams like the one that I'm delivering right now, or you can find the playlists of previous live streams right here. So I'm going to go to playlists. Let's go about halfway down and we'll find I might need to go just a little bit further. Advanced charting techniques. I'll click on view full playlist. And a few weeks back, you'll see that discussion, the weekly and daily PPO indicator. And you can use these archives to get caught up on other indicators that we've used to place other trades in our example portfolio right now. So going back here, we have a bearish crossover. Now, as I go to exit this position, let me know, might you be tempted? If you weren't paying attention, let's say we fell asleep at the wheel as I did here. Well, I just have to wait for the week to go by before I can take any action. Now our stock is starting to behave bullishly again. Is there a temptation to change the rules of a trade on the fly? It can be done. It might not be the most disciplined approach to trading, but I can see some people possibly considering that. I'm not going to. In this case, let's go exit our GE position. We're going to create a closing order and sell those shares. I'm going to just switch that to a market order to try to get the quickest fill I can. Obviously, with market orders, we may not be thrilled with the price we get. We're not guaranteed to get the current price. I'm just going to click confirm and send, sell these 100 shares at the market price. There's no commission on this trade. There won't be on our other trades today, but there can be on some types of trades. So let's send this order off. And that's GE, sold out, 306.05. I think we took a $2 per share haircut on that, something like that, or around a $200 loss on that position. Next up is Intel. So with Intel, first of all, note we have a sell order in place. There is a stop at 41.50. We need to be aware of that if we choose to exit today. But let's go look at our Intel. With Intel, we bought 100 shares back here, but not on a weekly and daily. Let's bring up the study set for this trade. There we are, the 200-day triangular moving average and the true strength index. So we had an upward sloping 200 TMA along with a bullish crossover right here on our true strength index, and we got our bearish crossover. Now look at this. This was just the way it works sometimes. We looked at this last week. It was right before earnings, and it was teasing at a bearish crossover, but we didn't have one yet. So we hung on. That's a disciplined execution of a plan, but the earnings was not kind to this trade. Yeah, overnight we were looking at quite a profitable trade. Overnight we surrendered quite a bit of those profits. That's a risk. Got a little bit of a recovery since then, but let's close this out. So we've already taken about an $8 profit, about $400 on 50 shares. Let's exit. There'll be a profit on this one as well, unless something weird happens, another $400 here. Let's cancel this order first of all. Canceling our stop so we don't wind up selling shares we no longer own. And we're going to right click and create a closing order for those shares. Just as with our GE position, I'm going to switch this to a market order in that effort to try to get out as quickly as possible. Not guaranteed this price though, but let's click confirm and send. Selling the 50 shares of Intel at the market price, no commission. I'm going to send that off. And we're out. Okay, so we have a realized profit add $400 on the first 50 shares, about another $400 on the second 50 shares. So that's nice. Next up is our McKesson position. It's a little tiny position. Last year we were taking smaller positions. This year we're taking a little bit larger trades, not a little bit, a lot more. But let's go to our study set here. Let's load up the McKesson trade, which was our zigzag high-low. Bought on a bullish zig, looking for a bearish zag. We don't have that yet. We're going to leave this one in place, and there is a stop waiting there in case, there's a gap between webcasts and we have an exit, but we don't see it, or just if price falls and there's not a technical exit signaled. In any case, we're going to let that one continue to work. And just as with the other ones, you can go to the archives on Thinkorswim, on YouTube, and get caught up with, what in the world is the zigzag high-low indicator? I've never heard of that. We talked about that in good detail a few weeks back when we took this trade. Actually, it's been a couple of months back now. All right, so we have one more position, which is our MNST trade. But before we go to Monster Beverage, let me hit the pause button on the presentation, because I just noted that there's been a survey link added to the chat window for the live stream attendees. So if you're here in the live audience, if you do me a favor, go to your chat window, click on that chat link, or pardon me, on that survey link right now, and then fill that survey out when the webcast is over. You can give me some honest feedback. I literally was just going through feedback for another webcast, maybe 20 minutes before this webcast launched. But those surveys are really short. They're just 2 questions, and then there's a comments box and a suggestion box. But I always say, I promise, if you take the time to fill out those surveys, I take the time to read through that data. I read through the comments. It's always helpful. It's never a wasted effort. Okay, so thanks for doing that, guys. I will not ignore your good efforts. So let's go back to Monster Beverage. We own 200 shares of MNST. They're not doing so well. Let's see the reason why the trade was taken. This was obviously an example reason. Let's load up the strategy set for MNST. This was our Bollinger Band triple study set. So we're looking at 3 different types of Bollinger Bands last week. Was this? Yeah, this was last week. That's right. Our entry was right there. And what we had noted was that our Bollinger Band width had narrowed to its narrowest point. This was the tightest squeeze in 6 months. That's when our Bollinger Bandwidth line hits this lower dashed line. That's what it's indicating there. It's hitting a 6-month narrow. Then we also noticed that subsequently price moved above the upper band as identified by our Bollinger Band or our Bollinger percent B line. When we go above 100 here, that means that we've stretched above our upper Bollinger Band. The nice thing is those things are both searchable or scannable. So we created a scan that looked for 6-month lows with a recent break above that 100 on the percent B. So we took an entry with the plan here to do what John Bollinger said originally when he constructed the Bollinger Band study set. A suggested exit that he had was to use the parabolic SAR as an exit. So if we got a price crossover of that PSAR, that might be an exit. And guess what we have right now? We have our PSAR chasing price. That's now popped up because price has shifted down below that. That is, as of this moment, as we're talking, that's an exit. So let's exit. We're just going to be taking our losses right now. A couple of bucks per share again in this case. But let's right click here. Let's create a closing order. This is the most active management of our portfolio I think that we've ever had in this series. Don't usually get out of 75% of our trades in one discussion. In any case, let's go with the market order again. Trade's over. Let's get it done. Let's click confirm and send. We're going to sell the 200 shares of MNST at the market price for whatever we can get. There's no commission again, but I'm going to send that order off. And we've sold, we're filled, we're done. So that's it for existing positions. Let's go take a look at what's going on with the markets as we're planning and placing a new example trade using a new example trade technique. So here's the S&P 500, and I need to load up our S&P 500 strategy set. So that's our trend value momentum strategy set. Finn says, with so many indicators, which three do you believe are the most efficient? Finn, it's a solid question. It's absolutely a valid question, but it would be outside the scope of my responsibilities, or actually just the parameters of my role as an educator to say these are the three best. Nope, can't do that, because it would be the way that I compare this, because I actually had a career 30 years ago before this one. I've been in the markets in a professional capacity for this, my 29th year, almost 30 years. Yeah. But before that, I owned a fitness center. And I don't know if you if you can remember the first time as a new fitness enthusiast, you go to a big glittering facility that got 20,000 square feet of all kinds of modern technology, and you think, oh man, look at all these tools I have here. I wonder which three are the best. So you tap a personal trainer on the shoulder and say, hey, which are the three best machines? And they say, well, you need this one and that one and that one. And you say, fantastic. And you get at it. And while you're working out, you see another trainer and you tap them on the shoulder, just because you're doing your due diligence. And you say, hey, what are the three best machines in this whole facility? Oh yeah, it's that one and that one and that one. Totally different set. And it sounds contradictory. Well, trainer A said this three and trainer B said that three. Well, maybe they have different objectives, or maybe there are some common threads running through those machines. Maybe one said treadmill, the other one said stair climber. Both are cardio equipment. Maybe one said pec deck, the other one said bench press. Maybe the bench press person was right. Anyway, but they're both suggesting that you maybe build some upper body strength. But that's it. There are pros and cons to each tool at the trader's what's the word I'm looking for? Anyway, available to the trader. But we have to understand those pros and cons, see if it fits our preferred time frame, our preferred other technical approach. Is it complementary to the tools that we're already using? And then make the decision. So it's a great question. That's a long explanation for why I can't tell you, which three might be best for you, if any three. Not everybody's a technical trader. Anyway, so let's get back to our TVM strategy set. Jay Richardson says it's in the eye of the beholder. Art Vandelay says it nicely. It's up to the trader's discretion. Disposal, thank you, is exactly the word I was looking for. Yep. So let's see what's going on with the S&P 500 trend value momentum strategy set. So this is a technical tool set that's sometimes used by traders to examine market indices, sometimes to look at individual stocks. But basically, it's a combination of a trend confirmation represented by two triangular moving averages, the 50 and the 100, a value confirmation represented in this case by the RSI, and finally we have the MACD histogram, which is for a trader looking for momentum shifts, TVM. So what's up with trend? We're a percentage point below all-time highs. Guess what? The trend still looks bullish. Pardon me. Could it change on a dime? Absolutely. It's interesting, though, that we've made higher highs on our trend, that our 50-period triangular is still above the 100. But looking down at our value indicator, the RSI, we do have lower highs. At the same time, we have higher highs on price. What do some technicians refer to that as being? That's known as a divergence, and it might be just an indication that there's some short-term weakness in price that might not be otherwise obvious by looking at price. So this might be a check for bulls for trend, maybe a question mark or a check for bears for RSI. But finally, if we zoom in here, what just happened with MACD histogram? It actually just switched from apparent bullish momentum, which faded kind of quickly, into now very light bearish momentum. So even a bull using this set of technical indicators may hit the pause button a little bit on getting in, let's say, taking a full-sized new stock position. Maybe they scale back as a result. Not everybody uses a TVM approach, obviously. Otherwise, you'd see it on every chart as you're walking past a trader's desktop. But let's just say overall, still bullish, but maybe that today isn't the best theoretical timing, might be the conclusion of this trader. Nevertheless, we're having our webcast right now. I'm going to go ahead with our trade. But again, maybe an adjustment the trader might make here is just scale down that position, maybe not take quite so many shares. But let's go to our example tool. And I want to set up this discussion. Let's go back to charts. I didn't mean to click on the education tab. I'm going to go to Walmart. That's going to be our example stock today. And I'm going to keep other technical observations about the chart fairly straightforward so that we can focus the bulk of our remaining time on learning about the VWAP. So let's clean off our study set. Let's just remove all the studies. Thought you were talking about the VWAP indicator. We are. Yep. So this is setting the stage for VWAP. VWAP is commonly used as a refinement to the timing of an entry where the trader has already decided today's the day I'm going to buy. Now I just need to know what time today. So here might be the logic of our trader for Walmart. Maybe they see that our stock has been going up. It's made a recent sharp rally from about $110 up to around maybe 120 or slightly above. And then it's been pulling back. What do we call that, you advanced chartists? Yeah, this is commonly known as a bull flag. And if you look at the activity of the candle right now, it's pushing out through the upper side of the flag portion of that price pattern. So let's just say that our trader here sees a bull flag entry, and a common assumption is that maybe the flag pole might be used as a measuring device to see where we might head from here. So if we ran up from 100 to 120, or pardon me, 110 to 120, it's about a $10 flagpole length, shaving off a few pennies there. We pulled back down to a low about 115. Maybe we're going up to 125 from here. No guarantee that that's exactly what's going to happen, but let's say that that's our trader's outlook, and they think, I'm going to buy this thing today. We're shooting for 125, but I wonder if there's a way that I might get 25 extra cents, 50 extra cents out of this trade. If I can do that consistently, which is that's a tough task, but if we can theoretically add to the timing of entries, or maybe on the back end, add a little bit per trade, maybe that adds up a lot over time. So how might we address this question of intraday timing, knowing the moment to take a trade? Well, for some traders, they might just go ahead and place a trade. That's fine. But for others, they might recruit this thing known as the VWAP. Volume Weighted Average Price is the acronym. But it's a technical tool that incorporates elements of volume and price in establishing an average value for the day. And maybe for the trader who's trying to buy, well, maybe this is the way that I'll phrase it. Let's go to our shorter term chart. Let's go to a 1 day, 1 minute chart. And by default, this is going to show the normal hours of trading. That's our white background. It's also going to show the after hours trading. That's our gray background. Traditionally with VWAP, we don't use that after hours stuff. So I'm going to take that off the chart. So I'm going to go up to our chart settings, go to equities, and let's uncheck show extended hours trading session, click apply. Next up, let's add our indicator. So we go up to our studies, type in VWAP. We've done a webcast previously about anchored VWAP, so let's talk about VWAP. Add that to our chart. And as we do, this is going to give us already a little bit of a peek into the construction of this indicator. We have -2, +2, and then day. So what we're looking at is this is a 1 day chart. I mean, the indicator is for the day, and it uses 2 standard deviations. So we have a 2 standard deviation departure to the upside. That's our +2, and then a 2 standard deviation to the downside, which is -2. Let's click apply and click OK. So here's what we're left with. We have 3 lines. We have the purple line, which is the volume weighted average price. Just think about this as sort of an average line for the day. Then we have an upper band and we have a lower band. And yes, this is 2 standard deviations above our VWAP line and 2 standard deviations below our VWAP line. What does this look like? It looks very similar to what might be a familiar technical indicator to those that are maybe more traditionally using these on a daily or a weekly chart, a Bollinger Band. Pretty similar. Not exactly the same though. But I kind of cut myself off a little bit earlier. And I said a VWAP is an effort to refine the timing of entry. All right. And what our trader might be looking for here is, well, if I'm about to buy the stock, do I want to pay above average prices for the day, or would I maybe prefer to buy at or below average price for the day? That is what VWAP is commonly used to gauge. Now, there's another thing going on here. Now, Agariba says on the trade tab, it's that same VWAP by option statistics. It's going to be a little bit different. This is just the charted VWAP. I'd have to go a little bit too far into the options weeds to explain the other one. Anyway, somebody's saying, can I show how to use Bookmap, maybe in another presentation? In any case, yeah, theoretically, our trader who's already determined they want to buy the stock, maybe if possible, if they have the patience, maybe as they wait through the day, attending to the other positions in their portfolio, if they're able to buy when prices seem to be at or possibly even below average, could there be an advantage to that? Potentially. Now, there is actually a very large group of traders, investors, who sometimes use VWAP for the timing of entries and exits. Institutions, not every institution. I can't speak for every way, the way that every big portfolio manages their charges, but for some institutional traders or investors, when they are moving out of a big position or moving into a big position, they have a strong motivation to try to do that as quietly as possible. Put yourself in the shoes of a great big portfolio manager. Maybe you have a huge position in Walmart. Walmart's a big company, but you're managing, I don't know, tens of thousands of shares, and you've decided, I need to cut back on these shares. Well, do we want to just throw a sell order into the markets? Maybe at a time when the market is already selling for the day, and we're just adding weakness upon weakness. And as we're just adding fuel to the fire, maybe as we're waiting for that giant order to fill, we're getting filled at lower and lower prices because everybody else is trying to sell at the same time. That can have a double negative effect. Number one is it hurts the fill orders that we're getting. But number two, it's not being a good neighbor, driving prices around like that. So for some institutional investors, they'll use this volume weighted average price to see, well, if price is already well above average, maybe if they start to sell, they're just sort of pushing things back toward daily averages, not having as huge of an impact. And maybe that might also assist them in getting their more favorable fills. Even they don't know if it's going to work perfectly. But at other times, when they're ready to buy into big positions, maybe they'll look to buy when prices are significantly below average levels for the day. And then they're just sort of nudging price up toward average again, not having huge impact on the net change in price for the day. So that sort of thing for individual, or what we call retail traders, at least in theory, presents a possible opportunity there. Well, if that's the way that institutions are behaving, and we might anticipate that as price gets well above average, maybe those institutional sellers will come in. If price gets well below average, maybe those institutional buyers will come in. Could that just influence things back in the direction, maybe help with entries and exits on our individual trades? That's the idea. Obviously, the behaviors of institutions are not directly known by individual traders, nor is it guaranteed to cause price to do what we might hope it would do. But that's the concept here. So let's get into how this thing is built. I think you're already getting a feel for how it might be used to tailor entry and exit signals. But how's it built? Well, the first thing we need to do is determine an average price. If the trader is trying to buy, let's say below average, or trying to sell above average, we need to determine average. Well, anybody can calculate an average. Let's say, I'm just going to throw out a hypothetical scenario here. Let's say that we have this very lightly traded stock. It's not Walmart. Walmart doesn't trade in these tiny quantities. But let's say we're getting very thin trading, 10 shares at $41, and as the price moves to $42, another 10 shares, let's say 10 shares each. Okay, at 41, at 42, at 43, at 44, and so on. But then there is a trading frenzy, 1,000 shares at $50. All right, so if I'm just an outside observer and I'm looking at those 5 different price levels and I'm asking myself, hey, where was the average trading happening on this? Well, if we do a traditional average, we'd say, well, here's a traditional average. Or should we just call it this, maybe a more familiar term, a simple average? Would be, well, we got some trading at 41, we got some trading at 42, we got some trading at 43, we got some trading at 44. And so we might just add those things up. Actually, let me throw in one more number just to be consistent with my prepared notes, because I always prepare. Let's throw in 40 as well. Give ourselves 5 price points here. There we go. So a simple average would just add up these 5 price points and divide that by 5, and that would give us our average trading price. Actually, got to throw in one more. So I got a little bit ahead of myself. We forgot about 50. So we add that up, divide that by, oh, I did get a little bit ahead of myself. I didn't have 44 in my notes. I want to get the right numbers here. I could recalculate them, but I don't want to. There we go. You know what? My notes are wrong. That's what's going on. So I want to make sure that we get the calculation correct. So we have 40 plus 41 plus 42 plus 43 plus, let's say, 50. All right. Let's divide that by 5, and that gives us an average value of 43.20. All right. Well, that gives this would-be trader the impression that that the bulk of the trading happened, in this batch, when actually this might possibly should have carried the most weight. So this is an unweighted, according to volume, average price. So what is a volume-weighted average price? Well, it takes those same numbers and just adds in volume. So our 40, which got 10 shares of trading, becomes 400. Our 410, or our 41 becomes 410, and so on, okay? Here we go, 420 plus 430 plus, now we get to the big trade. Our big trade, we had 1,000 shares. That would actually have a volume-weighted value of 50,000. So then we just add all this up and divide it by what? By 5? Nope. We actually divide this by the total volume. So in this case, that would be 1,000 shares plus an additional 40. So that would be 1,040, giving us a final value of 49.67. Okay, Jim says, what's the difference between volume-weighted average price and moving average weighted? That's a good question, Jim, because basically what we're doing here, this is my simplified version of a volume-weighted average price. It goes a little bit beyond this. This is sort of an oversimplification of things that really is closer to an exponential moving average. But it does give the point. And that is we've moved the area of emphasis for average price closer to here. So, but unlike an exponential moving average, instead of just multiplying by, an exponential moving average would multiply by like the number of the number of points in a data set. So it is different. VWAP is actually calculated a little bit differently. So hang in there with me. This is an advanced technical analysis discussion. So I hope that you can bear with me with this. It's a little bit heavier lifting, but not really. To really calculate the volume weighted average price, maybe we'll just use our chart and envision this. First thing that we need to do before we can start drawing this VWAP line is determine the average price of the first candle. We don't just go to the middle. Actually, the way the average price is calculated, not just the high and the low and going in the middle, but it also incorporates the close. So we'd look at the high, the low, and the close for that first candle, divide that by 3, and that becomes our average price. And then we multiply that average price by the volume that was generated during that candle to give it its value. It's sometimes called PV. I think of that as the sort of the period value. In other words, the one candle being the period. But we calculate the average price and then multiply it by volume. And then divide that by the running volume for the day, which so far is only one candle. But that gives us our VWAP value, that's our purple line, for that candle. And then we just move on to the next candle and we repeat that process. The high, the low, and the close divided by 3, multiplied by the candle's volume, divided by the running candle for those first, or the running volume for those first 2 candles. So we're incorporating volume into this, and it's incorporating volume very much in this respect. It's just using a different calculation instead of just going with, a single price point. We're using 3 price points: high, low, and close. So that generates our volume weighted average price, and that just changes throughout the day. As new candles come in, we calculate that new VWAP value, we add it to the previous one, divide it by the running total of volume, and on that goes. So from there, we take 2 standard deviations above and below to generate these lines. So JDLMI says there's a script on this that I can scan it. It's no script. It's just already there, JDLMI. This is just a technical indicator that we added using our study set right up here. We just added VWAP on an intraday, a 1-day, 1-minute chart. So all of that is how it's built. We've already talked a little bit conceptually about how it might be used, but let's be a little bit more precise than that. I think you've probably already gauged for yourselves. For our trader who is maybe looking at a longer term chart of Walmart, just as a quick reminder, let's look at this 1-day chart of Walmart. Here we are looking to buy possibly on this bull flag breakout. But as we go to that intraday chart, here's what a trader might be looking for their timing. They may be looking for price when it's getting up closer to our upper band. We're really getting above average. We've actually gone up so far that we're almost 2 standard deviations above average. And these standard deviations capture about 95% of all price activity for the entire day. So we're reaching relative extremes is the concept there. Maybe price is going to come down. This might be, if we're trying to buy, conceptually, the worst time to buy. Where might be better times to buy? Well, maybe when we're closer to average. Maybe like we had back here at, this was about 39 minutes ago. Right now it's 11:39 Mountain Standard Time. About 39 minutes ago, we were right down close to average for the day. And you can see how for some traders, they might be looking at those average levels. If they're just trying to refine their entries, getting in at maybe a little bit better prices, those might present those opportunities. Now, at other times, if we get well below average, some traders will take that as an entry as well as we reach that lower, that -2 standard deviations. I've got to say, and there are actually a couple of examples of that just today, earlier today, in the early session You can see we got down to that lower envelope. Here's what we have to be prepared for if we're trying to buy at those lows. We better be ready to be buying with red candles. This is literally trading at or near daily lows in many cases, not always, but in many cases we'd be buying with red candles. And so for some traders, that might be a little bit counterintuitive. It might go a little bit against their natural trading grain. But on the other hand, if we think about that, are we maybe going to be getting better prices on average if we're buying at lows? Or are we maybe going to be getting better prices on average if we're buying at highs? Buying on red candles versus maybe selling on green candles. Anyway, but bottom line if you followed the construction of the indicator, that's great. The most important thing is to understand how it might be used for entries and for exits. So to summarize the two entries, buying at or near averages coming down from highs is one potential entry. Another is when we've gotten really low and we've actually stretched all the way down to that lower line. Now let's sort of pitch ourselves forward. What if we're in our Walmart trade? Maybe we've gone up and we're getting close to our target. Maybe it's time to exit. If the trader is looking to optimize their exits, they may look to sell at or near these highs. Or if price has rallied up from lows and it's just come up to average and maybe it's pulling back from those averages. Okay, so Michael says, can we use VWAP at different time frames by updating the time frame of the study, or is that a whole different discussion? Michael, traditionally VWAP is used on an intraday basis. If we're going to a longer term time frame, maybe we use something similar but intended for those time frames, like a Bollinger Band. All right, but let's go place our trade for our stock. Now, I'm looking at this, and if you heard anything I said, you're probably thinking, Cameron, this is not good timing. Well, I'm sorry, I couldn't line this up with my discussion. I couldn't pull the strings with the markets to make sure that timing was perfect the time I placed my trade. But at least we've had our discussion. Let's switch this back to a one-year chart, and let's take our bull flag entry with the plan to maybe get out at 125 and a plan to maybe get out at 115. Let's say our stops are going to be down below the flag in kind of traditional flag fashion, with a plan to take profits if we get up maybe at 125. That's the flagpole length. So I'm not going to put in a target or a stop, but instead, if we get to one of those levels, we're going to revisit VWAP and see if we can help the timing there. So let's go back to our trade tab. Let's put in our order. I'm going to right click on this ask price. No, I'm just going to put in a normal trade. Let's just buy some shares. Maybe size this down because of the markets looking a little bit soft on those two technical indicators. I'm going to put this in as a market order. I'm going to buy 50 shares. We're not guaranteed to buy for 118.32. And there are no commissions on this trade, but there can be on some types of trades, and we're going to send that order off. There we go. We just bought those shares. Okay. So guys, we've done it. We've had that discussion. Yeah, VWAP is a little bit more of an involved indicator. If this is your first exposure to it, this is one of those webcasts where if you really want to understand how it's built, you may want to go back to the archives of this discussion and go to the portion of the discussion where I talked about the construction of the indicator. If you don't really care about the inner workings of the indicator and you're just more interested in how we might generate buy and sell signals, that was a little bit lighter lifting. But in any case, we've done it. We went through our existing positions, looked at the markets, and then learned, for some of you, a new technical indicator that might sometimes be used for gauging the time of day to place a trade. Jay Richardson, my pleasure. Gonna let you guys go, but as I do, I want to throw out a reminder that you have some great resources available to you from Schwab Education, starting with the YouTube channel. If you haven't subscribed to our Trader Talks channel, pop down, click on the subscribe button. It doesn't cost anything. It only takes a second. but this is where you can join our live streams and you can find playlists of previous discussions. Now, another thing that Kevin and I would suggest you do is to follow us on social media. You can find Kevin on X at Kevin Horner CS. You can find me on X at Cameron May CS. I'm very active here. And if you reply to one of my posts, I try to reply right back to you. This is a post that I made just today about learning more about your instructors. There we are. Now, you can also follow me on LinkedIn. Just go to linkedin.com/in/Cameron May CS and give me a follow there. Best place to connect with me in between the live streams. Now, a quick reminder also that there is a survey for the live stream attendees. If you'd click on that survey link that Kevin has nicely reposted there in the chat. 2 questions, a comments box and a suggestion box. And if you fill that out, I'll take the time to read through that data. Your comments are always helpful. Kevin, thanks for helping out. Thanks for all the thumbs up. 200 people watching a live stream right now. I can see it's 73 of you already clicked that like. That's really appreciated. Guys, go have a great weekend. I will see you next week. I'm going to look for you in a future webcast. I'll also look for you on social media, on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.